Check this out. The global carbon ETF KRBN, since launching in August 2020, has had more than a 150% return. And as of December 2020, the total value of global carbon markets was at $277 billion. But that was over a year ago. Right now I'm recording this in January 2022. What could we estimate to be the value of carbon markets globally today? Well, to get an estimate, we can just take a look at the KRBN ETF. We can set the date on this chart right here to December 31st, 2020. And we can see since December 31st, 2020, year-end 2020, global carbon markets, as represented by KRBN, have returned over 100%, 106.94%. So if we multiply that by the $277 billion, we would see that today global carbon markets are worth an estimated $573 billion. That's freaking huge in rapid growth. So let's take a deeper look at carbon credit investing. Okay, so what the hell are carbon credits? Well, carbon credits are transferable instruments that represent 1 metric ton of carbon emissions. Now, there's 2 types of carbon credits. The first one is voluntary carbon offset credits. Now, what this means is that they represent a metric ton of carbon that has been offset by action somewhere else. So, for example, somebody plants a forest in the area that has been deforested, and now they've offset 1 metric ton of carbon, so now they can create a carbon offset credit, and that can be certified by an agency or something like the International Carbon Reduction and Offset Alliance. Again, these are voluntary, so why would companies buy them? Well, companies that are looking to either maybe improve their ESG rating or claim a net zero carbon footprint could buy these to offset the carbon that they are producing and substantiate those claims. So, for example, I was on an American Airlines flight a few months back, and in the seat in front of me was one of those little pamphlets that just has random information that you pick up when you're bored on a plane. And I picked it up, and I looked inside of it, and it said, we are a carbon neutral company. And I'm thinking, how in the hell is this company that flies jets around a carbon neutral company? I thought like this was just some marketing baloney that somebody in the marketing department made up and printed out. But, that can be substantiated, and how they're substantiating that is by buying these voluntary carbon offset credits. Then there's compliance credits, and these are the ones that financial instruments use, like the KRBN ETF. They're, as the name implies, compliance. They are issued by a governing authority to ultimately control and, kind of put a tax or put a price on the carbon in that area. And the demand for these is being strongly driven through things like the Paris Agreement, which is a global initiative joined by a bunch of countries to reduce our greenhouse gas output and ultimately limit the amount of global warming that we have to 1.5 degrees Celsius, I think, by the year 2100. And countries are adopting this. The US was a part of this back in 2015 or 16 under the Obama administration. Then Trump came in 2017, took us out of that. And then 2021, Biden put us back into it. So countries are adopting this Paris Agreement. There's a lot of undisputable scientific evidence out there that carbon emissions are negatively impacting our planet and potentially our ability to continue on the planet as a species. So therefore, there needs to be something done to control this, and governments are issuing these carbon credits to, be in line with this Paris Agreement type of thing. This cool document here that I found from JP Morgan has a lot of information into the actual demand for carbon credits and carbon emission output and such. And we can see in this chart the countries or region covered by carbon regulation, tax, or ETs, and I'm not sure what ETs stand for, but looking back here in 2010, very little of the world had it. We had US, some parts of the US, and then the European Union, obviously, here was broadly covered by it. The US, I guess really the only part of the US was New York there and a little bit of Canada. But fast forward 11 years to 2021, you can see more of the world is falling under these carbon emission regulations, which require carbon credits. So there's going to be new markets of carbon credits and a strong demand for it. If we come down here, we can see the Russell 3000 representing the U.S. economy relative to global emissions. U.S. emits about 20% of carbon globally. So if the U.S. under Biden or one of the next administrations takes this Paris Climate Agreement more seriously. And I don't want to say that they're not taking it seriously right now. We just rejoined it, but they're bound to start implementing some of these carbon controls and issuing carbon credits, and therefore creating a new market. And subsequently, it's very hard for companies to reduce their demand. The control mechanism here, being the carbon credits, is tightening them down or being undersupplied relative to the amount of carbon that companies are emitting. So that's driving the prices up. So yeah, there's likely to be a strong demand for these carbon credits going forward, and subsequently, I think you'd be naive to look at the KRBN chart and say that in this time period here from August 2020 to January 2022, that this is just carbon demand growth that's driving this. There's certainly some speculator and investment growth that is ultimately driving the demand and impacting the demand for these carbon credits. Now, we saw the rip-roaring growth of KRBN since it was launched in August 2020, but behind KRBN is actually a global carbon index. So we can get some information on that, and I found in their data here an actual index chart that shows the value of the index, indexed to 100, going back to, July 31st, 2014. This was clearly produced by somebody in Europe. So while the, KRBN ETF has just been on a rip-roaring period here, prior to that, we can see that carbon didn't always go up as an investment. Since the index started, the first 4 years, it basically went nowhere. If anywhere, it went down. Kind of rip-roared up from July 31st, 2017 to July 31st, 2019. Then went flat, like everything else in March 2020. When shit hits the fan, there's a saying in the quantitative world, when shit hits the fan, correlation goes to 1. So correlation went to 1. That means that everything's doing the same, like equities. Carbon credits, the value of them dropped, and then since then, that's just when it absolutely took off. And one of the other cool things we can see here is, the constituents of this fund, or not the fund, but the index. So this ETF is comprised of futures. It's not actually holding. There's not like a firm out there holding and buying the actual underlying carbon credits. It's using futures. And in this document right here, it covers the futures markets that it holds in there. The European Union allowance is one of them. California carbon allowance is another one. And the Regional Greenhouse Gas Initiative. Initially in my mind, it's like just 3. That's very concentrated, but I guess that's really all there is. Maybe that's going to grow. I guess I should have probably checked to see if there's going to be new future markets added to this. Accessibility of future markets there on page 4. Scroll down to page 4. Oh, that's right where we were. Yeah, the IHS market may consult with the IHS Market Global Carbon Index Advisory Committee to review potential carbon credit futures for inclusion or existing carbon credit futures for exclusion, depending on the developments of the respective markets. So this index is open to holding other futures markets. So yeah, personally, I do think long-term the value of carbon credits are going to go up. I don't equate it with monopoly money like I do crypto. Personally, I'm not a huge fan of crypto. Anyways, that's a whole nother topic. I'm not going to jump down that wormhole, but I do see a growing demand for carbon credits. And as a quantitative investor, maybe there's even some correlation between, the president of the United States and the demand for carbon credits. Actually, you know what? The carbon index chart totally dissuades that, because here under Trump, the value, and after we left the Paris Agreement, the value of the carbon index totally went up. So I guess no real correlation there, at least none we can establish at this point. So on that note, if you want to invest in carbon credits, how could you do it? Well, going out and actually buying the credits is very difficult. I did find like a brokerage online, and their website was in foreign language. I think it was in German, that lets you buy the carbon credits. So for most investors, the easiest way of doing that would be through KRBN ETF, CraneShares Global Carbon ETF. There's a couple other ETFs out there. Let's just see if we can find them. Here we go. We got a list of them here. There's only 4 of them, 3 of them by Crane Shares, and KRBN being the one we looked at on the chart with over $1.6 billion in assets under management. That's the Crane Shares Global Carbon ETF strategy. This one has certainly blown up and contributed to the speculation demand for global carbon credits. And then there's the iPath Series B Carbon ETN, and then the 2 others by Crane Share are isolated markets, so the European carbon allowance and then the California carbon allowance strategy. So maybe there's a pair trading strategy between the 2 of them, but I think for most retail investors, the easiest way to get exposure to the carbon credit allowance market, and hopefully, possibly for future strong returns, is through just buying KRB in your individual brokerage account. So keep in mind, this is not financial advice. Before making any investments, do your own due diligence and seek your own independent financial advice specifically for yourself. On that note, guys, what do you think of carbon credit investing? Let me know in the comments below.